Inventory can be prone to spoilage, obsolescence, and price declines, all of which can expose a company to substantial financial risk. A key example would be the substantial risk that certain technology-based industries face when inventories can quickly become obsolete. Therefore, the International Financial Reporting Standards (IFRS) requires that inventories be measured at the lower of cost or net realizable value. The net realizable value is equal to the selling price minus the estimated costs necessary to sell and the estimated costs to get the inventory in condition for sale. Normally, the net realizable value assessment is done periodically, item by item or by groups of similar items. If the inventory value is lower than the amount reported on the balance sheet, the value in the balance sheet must be written down to its net realizable value. The reduction in value is recognized as an expense under cost of sales or under a separate income statement account. Note that if the net realizable value increases in a subsequent period, companies are allowed to reverse the write-down. But the reversal is limited to the original amount that was written down and requires a reduction to the cost of sales. Let's look at an example. Gimco is a manufacturing firm that reports under IFRS. At the end of year 1, its cost of ending inventory was $200 million. But its net realizable value was $178 million only. In year 2, the inventory's net realizable value increased to $208 million. So what are the inventory values recorded on the financial statements? For year 1, Gimco needs to write down its inventory to the net realizable value of $178 million. The $22 million decrease in value should be reported on the income statement as an expense. In year 2, the company would increase the inventory carrying amount, but it can only reverse it by the amount of the write-down. So, its inventory would be increased by $22 million to reach the original $200 million and its cost of goods sold would drop by $22 million only. Find the full inventory measures and adjustments video on www.CogniVisio.com.